What kind of a retirement plan allows millions of people to lose 30 to 50% of their life savings just as they near retirement?
It's a society based on freedom and choice and personal responsibility. There are no guarantees.
It's important that people deal with someone to make sure to provide that guaranteed lifetime income.
Guaranteed lifetime income.
And now to our story.
Welcome to Playchecks for Life with Richard Ehrlich. Richard is the president and founder of the Secure Wealth Planning Group. Over the next 30 minutes, Richard will teach you how to turn your paychecks into retirement playchecks. And now, here's Richard Ehrlich.
Good morning, South Florida. My name is Richard Ehrlich, your host for Playchecks for Life. Hope you're having a great weekend. Hope you had a great week last week. So let's jump right into it. Wanted to welcome you guys back and tell you that we're very excited about today's show. And as always, I always like to start up by thanking all of you that have been calling in and coming in. And it's been really a pleasure meeting a lot of you and been able to help you out. That's the main reason why we do what we do at Secure Wealth Planning Group. Our goal is to educate you to make smart decisions for your retirement investment planning so that you can have a sound and safe retirement. And I always talk about this. Our show is called Playchecks for Life for a reason. People work very, very hard to accumulate money. And we talk about how important it is to make sure that you cover all of your bills in retirement. However, I'm just going to take a wild guess, ladies and gentlemen, and say that you have not worked and you are not working your entire life so that you can just pay your bills. What we want to focus on is not only that paycheck, but also that playcheck. To do the things you've always dreamed about doing, the hobby, the spending time with the children and grandchildren, traveling, golf, whatever it is. And that's the key thing. And your plan has to accommodate for not just the best case scenario, but in all scenarios. If you folks have any questions, please give us a call at 561-362-2293 or visit us at playchecksforlife.com. And while you're at playchecksforlife.com, be sure to download our complimentary retirement guide, the 10 things you need to know when planning for your retirement. And as always, our goal here is to separate the myths and misconceptions and bring you facts and real data that you can use to make some smart decisions. You see, folks, if you can get past all of those myths and misconceptions, then and only then can you start making some smart decisions and do some proper planning. And as we talk about every week, you need 5 critical elements to make sure that you have a solid financial plan. Number 1 is advanced tax planning. Got to make sure that you're paying the least amount of money in taxes along the way. People ask me often, what is the biggest expense when you're investing? And by far, it's taxes. And I have yet to meet anybody that tells me, given the state of the economy, that taxes are going to be going down in the future. So number 1, you have to have advanced tax planning. Number 2, you need to have a solid income plan. You have to make sure you have a solid paycheck and a solid playcheck. Number 3 is you need to have a very strong investment plan, a plan that does not lose half of its value every 5 to 7 years. Because if you get that wrong, then you can't plan for income because it won't be income. And don't worry about paying taxes if you're not paying any income. Now, if we're fortunate enough to get past those 3, then you can move on to estate planning, make sure things are titled properly and they go where you want them to go. And then finally, hopefully if you do some smart planning and you make sure that you enjoy your life, you have your paychecks and your playchecks covered, well, when it's time to pass your assets to the next generation, then we could talk about legacy planning. So there's many different things that we need to be thinking about, ladies and gentlemen. And quite frankly, what you really want to focus on is making sure that these things come together. If you have any questions, please give us a call at 561-362-2293 or visit us at playchecksforlife.com. And once again, while you're there, download our retirement guide. It's the 10 things you need to know when planning your retirement. Okay, so today's show, we're going to focus on being proactive with your retirement plan. And when I say being proactive, I want you to think about what you would do if you were listening to a show like this in 1999 or in 2007? All right, what would you do if you could have made some smart, proactive decisions before there was a significant market correction? What would that be worth to you? So, ladies and gentlemen, I would suggest paying close attention today, because what I want to do in today's show is walk you through some of the things that you really need to be hearing. I always ask people, will you hear the screams, right? My family thinks it's a bit strange when I talk to my car, golf clubs, etc., like they understand me. And I explained to them that the idea that cars and sports equipment, etc., can talk, that's a normal thing, right? I've seen plenty of people talk to a golf ball before they teed off, or watch people ever so calmly, pretty sad, but discuss life with their car if it refuses to start. We do the same thing when it comes to the markets. We talk about them making fools of everyone and not giving anyone a clear indication of what's coming next. We treat them as if they have an unpredictable mind of their own. That's all nonsense, of course, except when it comes to the bond markets, specifically high-yield bond markets. In this instance, I'm sure there is something to the notion of a talking market. And recently, the high-yield bond market has not been whispering quietly, it's been screaming. So I want you to pay attention. We're going to talk about in today's show some of the things that you really need to get your arms around. And let's see if we can listen and hear what the market is trying to tell us to be proactive so we can make some smart decisions. Once again, if you have any questions, give us a call at 561-362-2293 or visit us at playchecksforlife.com. When we come back, we're going to really get into what the market is trying to tell us and listen to some of those signs.
To start turning your paychecks into Playchecks, call 561-362-2293. That's 561-362-2293. Or visit playchecksforlife.com. You're listening to Playchecks for Life with Richard Ehrlich. More in a minute.
Hey folks, I'm Richard Ehrlich. I'm from Secure Wealth Planning Group in Boca Raton. As much as we'd like to think we learn from the mistakes of others, the truth is most of us don't. We learn the hard way through our own personal trials and tribulations. Our experiences, good or bad, make us who we are. Here's what we know. We know that historically the markets have had significant corrections every 5 to 6 years, and it has been 6 years since the last one in 2008. We also know that 80% of all market corrections occur between June and the end of October. Did your portfolio lose in 2008? Can you afford to make that same mistake twice? At Secure Wealth Planning Group, the investment strategies we use sidestep market downturns during the last 2 corrections. What's your strategy? Call us at 561-340-2667. That's 561-340-2667. Or visit us at securewpg.com. We don't need to keep making the same mistakes twice. You don't need to lose in order to gain.
Past performance is no guarantee of future results.
Like millions of Americans, you probably have questions and concerns about how to generate predictable and reliable retirement income. Most people have life insurance and a variety of annuities and other financial products. However, with Playchecks for Life, you'll have a dependable monthly paycheck you can rely on for your entire retirement. That's right. Let us show you how a steady income for your retirement is possible. Call the Playchecks for Life hotline right now, 561-362-2293. That's 561-362-2293. Or visit www.playchecksforlife.com. Live your retirement the way you've always dreamed it should be with Playchecks for Life.
You're listening to Playchecks for Life with Richard Ehrlich.
Okay, welcome back, ladies and gentlemen. This is Richard Ehrlich, your host for Playchecks for Life. Today we're talking about being proactive with our investment and retirement portfolio. Remember, we want to make some smart, proactive decisions, not reactive. And we've talked about this in previous shows, how buy and hold just doesn't work. It was a great strategy from 1953 right up through 1999, and it just hasn't worked. In case you haven't wondered, type in and look at the last 15 years of AT&T stock, and you'll see why. So we got to start thinking about what are some of the things that we can be doing proactively to avoid some of the headaches that are going to be coming our way. And we've been talking about listening to the markets, right? Is the market telling us? Are there any signs that maybe we can identify to help us maybe make some smart decisions now, just like we would have loved to have listened to the market in 1999 and 2007? Folks, if you have any questions, please give us a call at 561-362-2293 or visit us at playchecksforlife.com. While you're there, be sure to download our guide on the 10 things you need to know when planning for retirement. So let's think about this, folks. We live in contemptuous times. Our country's debt is climbing, a federal debt of $16 trillion, debt growing at $4 billion a day, and an unfunded liability of $130 trillion. Now, my question to you, ladies and gentlemen, is do you think that's going to have an impact on the market eventually? Social programs are no longer controllable, right? You have $1 trillion stimulus plan that they did, a $2 trillion healthcare plan, $700 billion TARP plan, they had cash for clunkers, cap and trade, carbon tax, all these different things, ladies and gentlemen. And so we need to be proactive. A lot of people get lulled to sleep because guess what? The market is rising. Well, we were all very excited and took a very passive approach through the 90s. And we also took a passive approach to the middle of 2000s, right up until 2008. So let's see if we can listen to what the market is telling us, right? Do you know that there has only been one other time in history when the price of oil has crashed by more than $40 in less than half a year? The last time oil crashed, like it has recently, was in the second half of 2008. And we all know what followed. Now, folks, historically, when oil prices have dropped, an economic slowdown has followed. And you can see what's happening in the markets now. Now, think about this. If the market is talking to us, let's see if there are some signs we can hear. Energy companies account for about 18% of the junk bond market. So it makes sense that the movement in the value of junk bonds is an indicator of market stability, good or bad. So let's take a look at what's going on with the energy sector of our economy. Is it quietly warning us of another financial collapse? Or has it already started screaming? You see, the United States is currently outproducing historical oil giants like Saudi Arabia and Russia. The fracking revolution has elicited a boom for shale oil-rich regions here in the U.S., and there is absolutely no denying that the shale oil boom has had a significant impact on our economy. Think about it. It has created millions of jobs and in my opinion, has been one of the largest contributors to a shrinking unemployment rate. In fact, the increase in domestic crude oil production has propelled it to multi-year highs. And according to estimates from the U.S. Energy Information Administration, U.S. crude oil output for the week ended December 5th increased to 9.1 million barrels a day, its highest level since 1983. But all of this could be coming to a crashing halt. And let me explain why. See, in essence, OPEC has declared a price war on the U.S. oil producers, and this is not good. You see, it costs a lot less to extract oil from places like the Middle East than to extract from places like Texas and North Dakota. If the price of oil stays on a downward trajectory, U.S. businesses could fold and jobs could be lost. OPEC knows this, and they are ruthless when it comes to protecting their market share. Ladies and gentlemen, when we want to hear if the market's telling us something, you got to listen to these signs. You got to understand beforehand. And I keep hammering over and over again, buy and hold will not allow you to listen to the market and take advantage of this. If you have any questions, please give us a call at 561-362-2293 or visit us at playchecksforlife.com. And once again, please be sure to download our complimentary retirement guide, the 10 things you need to know when planning for retirement. Okay, so let's continue. Since the last great recession in 2008, the energy sector has been one of the largest growth sectors of our economy. So let's think about this. If prices keep collapsing, domestic energy companies will not be profitable since they will not be able to cover the cost of production in the United States. The energy sector is responsible for creating jobs. And so if this sector slows significantly, well, this could be quite detrimental to our economy, don't you think? Folks, are you hearing the screams yet? Will history repeat itself? Could we have another significant market correction? Now, we're talking today about listening to what the market is telling us. In the late 90s, it was super overvalued companies that had no real value to them. In the 2000s, it was an overinflated real estate market. It's a matter of just listening to what the markets are telling us. And unfortunately, the majority of the folks out there are just not getting this kind of information because the brokers that they're with, their focus is just how much money do I have under management? They're not thinking about being proactive. When we come back, we're going to talk about what this really means to your portfolio, what you can do, And then we're going to follow up with a question of the week. If you have any questions, please give us a call at 561-362-2293 or visit us at playchecksforlife.com.
Playchecks for Life.
Are you serious? You're joking me. Are you pulling my leg?
What was that name again?
Playchecks for Life with Richard Ehrlich. More in a minute.
Retirement is a long time to go without a paycheck, maybe 20 or 30 years or longer, especially in the face of uncertain economic conditions. Do you have a sense of unease, a feeling that somehow you are not prepared? Are you afraid you may outlive your money? You're not alone. Many of our clients had that same concern. That's right, had, but not anymore. Now they all have Playchecks for Life. Let us show you how a steady income for your retirement is possible. Call the Playchecks for Life hotline right now, 561-362-2293. That's 561-362-2293. Or visit www.playchecksforlife.com. Live your retirement the way you've always dreamed it should be with Playchecks for Life. We specialize in retirement income planning for conservative individuals and couples who have successfully accumulated and want to protect a retirement nest egg. They are focused on creating a dependable, secure retirement income they can't outlive. If you are within 5 to 10 years of retirement, recently retired, or have been retired for some time, are you tired of volatile market fluctuations, skeptical of conventional Wall Street wisdom, looking to create and protect a dependable retirement income? We can help because we focus on creating steady streams of retirement income. Our expertise lies in more conservative investment choices. Speculative investments have no place in a retirement portfolio designed to create income and financial security.
Exciting, isn't it? To start turning your paychecks into playchecks, call 561-362-2293. That's 561-362-2293. Or visit playchecksforlife.com. We look forward to hearing from you. You're listening to Playchecks for Life with Richard Ehrlich.
Welcome back, ladies and gentlemen. This is Richard Ehrlich, your host for Playchecksforlife.com. Today we're talking about how to be proactive with your retirement planning and listening to what the market is telling us. So now that we know what the oil market and what the junk bond market is telling us, can we learn from that? Folks, are you hearing the screams yet? The market is telling us something, right? If we're only willing to listen. Now, here's the rub to all this. If about 18% of the high-yield bond market is tied up in the energy sector, I ask you a question. What is going to happen if those companies go out of business? They default on their debt, thereby triggering a depressed high-yield bond market, the effects of which will ultimately hit our equity markets. We saw this in the regular real estate market with mortgage-backed securities. See, the first to get hit financially are usually the banks, which is what happened in the last Great Recession with the housing crisis. Folks, consider what Barclays wrote in a recent article. Quote, high yield does provide useful sell signals to equity investors, end quote. In June of 2007, Bear Stearns hedge funds were some of the first to signal massive losses in the subprime mortgage mess. But despite the screaming of the high yield bond market, the S&P hit all-time highs by October of 2007. And then we all know what followed. Almost 18 months of losses that so many suffered. Don't you wish you had listened to those screams back then? Folks, if you'd like to learn more information about this or find a way to protect your portfolio and get an analysis, give us a call at 561-362-2293 or visit us at playchecksforlife.com. So Barclays went on to say, quote, equity investors should position themselves defensively the next time junk bond markets go haywire, end quote. That doesn't necessarily mean dumping stocks altogether. So folks, my message to you is like this. As we enter into 2015, just keep your eyes on the junk bond market and big banks. Now may not be the time to be taking on more risk. If you do not have a tactical risk-off investment strategy securely in your retirement system, well, why not? History has proven that when high-yield bonds collapse, a major market turn is the next to come. Heck, at least this time you've heard the scream. Folks, if you'd like to find out how we may be able to help you take a look at your existing retirement portfolio and just get an honest analysis to see if your portfolio is exposed at all to the potential pitfalls of a declining market, give us a call at 561-362-2293 and visit us at playchecksforlife.com. Ladies and gentlemen, our goal here, as we state every week, is to help you sift through all the myths and misconceptions, try to understand what's going on. I can only tell you that every week, people come into our office, whether it's a retirement pilot or a business owner or somebody that worked for another company for many years. And it's amazing how people, they accumulate all this money and they're so cavalier. They just walk into one of these big banks or wirehouses and I ask them, hey, how did you put this whole portfolio together? And I see a blank look on their face. Folks, we have to listen to what the market is telling us. And if you want to be proactive, if you want to be in a position to take advantage of what the market is telling us, then give us a call at 561-362-2293. When we come back, we're going to address our question of the week and we're going to wrap everything up.
You're listening to Playchecks for Life with Richard Ehrlich. Playchecks for Life. More in a minute.
Retirement income plans are not just for the wealthy. As retirement nears, the traditional strategy has been to move growth-seeking products to more conservative, fixed income products. This may have worked fine back when retirement was only expected to last 5 to 10 years. These days, however, people are living longer. It's not unusual for some retiring at age 65 to live to age 90 or longer. You may need to plan for your nest egg to potentially last 25 to 30 years. One drawback to a longer life is the greater possibility of outliving your savings, creating all the more reason to develop a retirement income plan designed to last a longer lifetime. We can help you design a guaranteed retirement income strategy which incorporates insurance and annuity vehicles to create opportunities for long-term growth as well as guaranteed income throughout your retirement.
Exciting, isn't it? To start turning your paychecks into playchecks, call 561-362-2293. That's 561-362-2293 or visit playchecksforlife.com. We look forward to hearing from you.
Hey folks, I'm Richard Ehrlich. I'm from Secure Wealth Planning Group in Boca Raton. You know, as much as we'd like to think we learn from the mistakes of others, the truth is most of us don't. We learn the hard way through our own personal trials and tribulations. Our experiences, good or bad, make us who we are. Folks, here's what we know. We know that historically, the markets have had significant corrections every 5 to 6 years, and it has been 6 years since the last one in 2008. We also know that 80% of all market corrections occur between June and the end of October. Did your portfolio lose in 2008? Can you afford to make that same mistake twice? At Secure Wealth Planning Group, the investment strategies we use sidestepped market downturns during the last 2 corrections. What's your strategy? Call us at 561-340-2667. That's 561-340-2667. Or visit us at securewpg.com. Folks, we don't need to keep making the same mistakes twice. You don't need to lose in order to gain.
Past performance is no guarantee of future results.
You're listening to Playchecks for Life with Richard Ehrlich.
Hey folks, this is Richard Ehrlich, your host for Playchecks for Life. Welcome back. Today we've been talking about making some smart decisions and being proactive in your retirement planning. We've talked about listening to what the market is telling us, and we've explored some of the signs, whether it's the oil market or the bond market, and what devastating effects that could have on your retirement portfolio if you are not in a position to create a tactical risk-off strategy in which you can avoid the next downturn. Let's get right into our question of the week. Our question of the week comes from Jan in Stewart. Jan asks, is it financially prudent to take Social Security at age 63 rather than waiting till age 66? When is the best time to claim Social Security? You know, folks, it's amazing how many people are asking the question on Social Security. We give classes at FAU helping people understand how to best utilize Social Security. And Jan, thanks so much for this question. You know, as I tell the folks in our classes that we teach, if you understand how Social Security works, it could be a very, very significant piece of your income planning in retirement. When I tell folks that Social Security can make up over $1 million worth of income during their lifetime, they're shocked, but that's the reality. So let's get into this. So Jan, getting back to your question, whether or not to take it early or to delay, I believe this truthfully just depends on your current financial situation at this point in time. I'm assuming from the information that your normal retirement age is age 66. The normal retirement age, meaning the time with which you are able to receive full benefits from Social Security. Now, assuming that you begin drawing it at the age of 63 with a normal retirement age at age 66, then you would be accepting 20% less in benefits. See, a couple of things to consider. The first would be your current cash flow needs. Do you really need this cash right now in order to survive? If not, then it might be more prudent to defer claiming this until you could reap the full benefits at age 66. The next item to consider is current life expectancy. If you happen to be in poor health at this time, it might be wise to begin drawing as early as possible. If you are in pretty good health, then you know something, it might obviously be more prudent to delay as long as possible so you can receive the largest benefit. Also, what people don't realize is that Social Security should be part of a comprehensive income plan. And what I tell folks when they come into us, we look at the comprehensive sources of income. If you have the ability to wait and you have longevity in your family, then for each year you defer taking benefits after age 66 up until age 70, which is the latest you can defer Social Security, you can get an 8% increase in the amount of those benefits. And it has major, major implications for various different scenarios for you. See, the Social Security Administration has great calculators to help you with this. You can go to socialsecurity.gov. If you need any more help with this, feel free to give my office a call at 561-362-2293. Once again, Jan, thanks for that question. It was an excellent question. I hope this was helpful. It does get tricky out there, folks, which is why you need a retirement and financial specialist like Secure Wealth Planning Group. Secure Wealth Planning Group is your source for complete and accurate information because you deserve more. Ladies and gentlemen, have a great week and take care, folks.
Exciting, isn't it? To start turning your paychecks into Playchecks, call 561-362-2293. That's 561-362-2293. Or visit playchecksforlife.com. We look forward to hearing from you, and we'll be back again next week. Thanks for listening.